Hello guys, my name is Sunday. You are welcome to Against FX. Yes, how is the training going, guys? I need you to uh, drop a comment at the comment section so that I will know how the training is progressing. All right. Like I promised, I'm going to do this for a whole month. So it's an opportunity for you to learn how to trade with this offer. You're not paying anything. I'm not charging you anything. It's just for you to just subscribe to my channel, my YouTube channel, activate the bell sign so that once I upload any video, you'll be the first to see it. All right? This is what a beginner's course, all right? And also, if you are a trader and you are still struggling, you can also go through this to fine-tune the way you trade, all right? You can also take advantage of this to fine-tune the way you trade. So that being said, please do subscribe, comment, share, and like the video. Yes, yesterday we talked about, or rather in the previous video, we talked about candlesticks anatomy. All right, the story behind candlestick. Because once you open your chart, all what you see is candlesticks, and candlesticks represent buyers and seller at the same time. So the ability for you to see them, visualize them, and know what is happening in the market is very, very crucial and key to us as a forex trader, because that's the only way you can know or been able to ascertain what is going on in the financial market. All right, whether the market is in a buy or is in a sell. All right, and apart from that, there's what we call consolidation, where price will just stop at a particular place. It's not going up, it's not going down. That is simply consolidation. It's just locked up in a range. All right, I will still touch on that once we get to that level. Today, like I said, my YouTube name is Against FX. You just open your YouTube, all right, even on your phone. Open your YouTube, you just type Against FX. It will display so many names. Yes, that is normal. Then you just see Against FX. Then you just click subscribe. It won't take you 1 minute. Click subscribe. Sometimes in my request for your email, well, you don't need to be scared. The system just want to know if you are a robot or human being. Then you just put in your email. You don't need to be scared. There's nothing. It's just a normal process. All right. Then once you subscribe, you go to the playlist where you have beginners free course. Beginners free course. That is where I am dropping all those videos that I'm going to be releasing for this whole month. All right, it's for freshers, people who are interested in learning how to trade and you don't have money to pay for a course. This is an opportunity for you. You don't have money to pay for a course because if you want to learn trading or you want to learn how to trade, most of us, some will charge $200, some $500, some $1,000, depending on everybody's packages, right? So if you don't have that, more especially people in Africa, $200 is a big money, all right? It's a very huge money. Yeah, but if you are living abroad, it's a small money. But the fact remains that this is an opportunity for you. You don't have money to pay for a course. please, the only thing you need to do is for you to have a data on your phone or your laptop, watch the video, go to your YouTube, watch the video. That's all. Watch the video and you practice what you have learned. Then you will just be trading. The only thing you need to do, any topic that I've already treated, you can go do a deep dive. Go to GBT, any topic that I've treated, take a deep dive. You want to know more, then you can do that yourself. That's all. That is all you need. And I'm giving you, I'm equipping you with the basics, what you need for you to be a trader. This is how it is. Once you have gotten this, at the end of this training, this period, all you need is any topic I've treated, take a deep dive. Do a research for yourself and know more about that. That's all. That is all you need. All right. So today's topic is candlestick patterns / reversal. Like I said, candlestick is very, very important. It's what you will see on the chart. And those candlesticks represent buyers, represent sellers. And candlestick will tell you story. Candlestick anatomy. Remember, it will tell you story about what happens, the transaction that is going on in the financial market. It's a candlestick that will tell you what is going on. So what is candlestick patterns? And apart from that, the reversal, we have a formation that when candlestick printed some patterns, it shows that the trend is about to reverse. In a moment, I will show you. Just be patient. So once you see some formation, what I mean by formation, like I know I promise there's nothing like grammar so that you won't get confused. Once you see some certain candlestick in one position or in one level, as a trader, once you spot that, you just know that, okay, this market has been buying. It is time for me to now change my bias because it's about to start selling. Or once you see a formation at a particular level, I don't want to be using support and resistance now because I've not treated that topic. Once you see it form at a particular level in your chart, then you just know, okay, I've been selling since, or rather this trend has been going down since. Oh, I need to change my bias. I now need to start buying. So those things will tell you. That is why they are very key and important. So what is candlestick pattern? Candlestick patterns are visual tools used in technical analysis to interpret movement of price in the financial markets. What I've just summarized. The summary of it is that once you see all those things, you just know that, okay, this is what is happening. This is what price is doing. It's either it's buying or it's selling. Or maybe the price stop at a particular level, that is consolidation. All right, I will still treat that once we get that, one step at a time. You know, I don't want to stay on a particular video for 1 hour, 2 hours. I can do that. But most people don't have the time, the patience to watch one video for like I beg your pardon, 1 whole hour. All right? Because of our tight schedule. I understand, we're all humans, all right? So that is why I'm breaking it down step by step, not too long video, so that you people will grab the concept. All right, so bear with me. If you are getting value from these videos that I've been releasing this period, please like, share, and leave a comment. And if you have any question, like I told you guys, drop it at the comment section. I will respond to your comment. And if there's anything that you are not clear about, I can still take it upon myself, make another video to clarify your doubt. All right. So candlestick patterns are visual tools used in technical analysis to interpret movement of price in financial market. You might be saying, what is technical analysis again? Yes, before you can take position. Now, let me come down. Before you can say before you can take a decision that you want to buy or sell, you have to perform what we call technical analysis. By the time we are performing technical analysis, by the time we get to that level, that means you're already a trader. So that topic is still a little far. We are going to treat it, but not now. By the time you start performing technical analysis, that means you want to take decision whether to buy or to sell. So that is the word, that is why we call it technical analysis. You look at the chart, read the chart, all right? You read the chart and that's okay, this is where the opportunity lies. That is technical analysis. And we have sentimental analysis and we have fundamental analysis. Those are the three types of analysis that we have. So when we get to that level, I will teach you guys. All right. So now I'm going to just show you guys some slides so that you just understand it very fast. All right. You understand it very fast. So that you get the understanding very fast. All right. Okay. We have types of candlestick patterns. All right. Candlestick patterns generally falls into three main categories. Now we have the reversal pattern. Like I told us, once you see a formation at a particular place or a particular level, you just know that, okay, it's been buying, now I need to change my bias for me to start selling. Now, this suggests, reversal pattern suggests a change in the current trend direction. Like I explained, if you are on a bullish trend, that means that bullish trend is preparing to turn to bullish trend. That is a bullish reversal after a downtrend. For example, if a trend has been bearish, then it will now want to turn to become bullish. A trend that has been selling. Now, once you see that formation, you just know that it is time for you to change your bias to start buying. All right. So those formation that you will see is you see hammer, you see morning star, then bullish engulfing. All these are candlesticks patterns. All these are candlesticks. We have the hammer, we have the morning star, and we have the bullish engulfing. Then don't worry, I will show you in a moment so that you will understand. So that you understand it, I will show you immediately. I will show you immediately. This is what we call morning star candlestick pattern. All right? Morning star candlestick pattern. All right, so the first candle opens at the top and closes at the bottom. Remember what I taught you guys about bearish candle. Bearish candle opens at the top and it closes at the bottom. This guys, what is this? This thing you see from here, from where the open is to this point. What is it, guys? I've already taught you guys. Please tell me, give me the answer at the comment section. And where they close it, look at where the candle closed. What is this? Please leave it at the comment section. I need your answer at the comment section if you have been following me. All right? Okay. Now, this is where it opens. It then means that when the market opens, all right, the candle opens here, seller took over from here, all right, they open this place. At this point, when the candle open, instead of the candle to start pushing to the downside, some buyers step in. They started pushing the price to the upside. This is what we call wick. All right, they started pushing the price to the upside. Then when it now got to this high, this level, sellers took over and brought the price completely down. All right, they brought the price completely to this level. This is the low. All right, when they now brought the price to this level, buyers took over and pushed the price to this point, and the time period now over, the candle closed. So it opens here, it closed here. This is the lower wick. This is the low. To tell you that there were buyers already in the market, the trend is about to reverse from a bearish state to become a bullish state. That is why you see this candle here. This small candle here is what we call doji candle. All right, a doji candle. Now, this doji candle is an indecision candle. It's what we call an indecision candle. But what we are treating today is a candlestick pattern formation that will trigger a reversal. All right, that is what we are treating today, so that we won't get things mixed up. All right, I'm just telling you, this small candle you see is what we call indecision candle. That is a doji candle. It's called doji candle. Small candle, doji candle, doji candle. All right, it's an indecision candle. At this point, buyers took over. You see what happens? The candlestick opened here, but sellers were still in the market. They pushed the price down. All right? But buyers now took over from here. They now started pushing the price to the upside. It now stopped here. Sellers took over again and returned the price up to this level. If you look at it, this is a draw game. We have a wick at the top, we have a wick below. So the body is of the same size. You see the upper wick and the lower wick, they are of the same size. So this is just like a draw game. Indecision candle. That is why we call it indecision candle. Indecision candle. All right? At this point, anything can happen. The buyers are taking decision. They're in a meeting whether to push the price, all right, to the upside. The sellers, they're in a meeting whether to push the price down again, whether to take over the market and push the price downward again. So that is why this is an indecision candle. Then what will now confound the formation? What will now confound the formation is the third candle that will now appear. Is the third candle that will now appear. Once a bullish candle appears, what are the characteristics of a bullish candle? It opens at the downside, it will close at the upside. Now, what happened? It opens here. You look at this small wick. All right, look at this small wick. It shows that when it opens, sellers even tried. They made an attempt to push the price to the downside, but they stopped here. Buyers now took over. They now started pushing the price to the upside. And they got here again, this high. Before this candle finally closed this time period, sellers still entered and they returned the price up to this point before the candle candlestick period now close. That shows us as a trader, as a forex trader, that sellers, though buyers are leading, but sellers are still in the market. But buyers are now more than the seller. Once you see this formation, we call it morning star. This is a reversal pattern. Once you see this formation at a strategic place, not just anyhow place. All right, I'm going to show you on the chart in a moment. Once you see it at a support level, all right, and once you see this thing at a support level, just be rest assured. Now, once we say support level, we are saying a trend that has been bearish coming down. It now got to a point where price supposed to reverse. They now see this formation. Once you see this formation, just take your position because the market will now change for a buy. You start to buy. As simple as that. So morning star is what? It changes direction from bearish state to a bullish state. As simple as that. And the things you also note is that the open gap down, all right? This very one, the open will gap up. Gapping up simply means that where this dodgy candle close, you will see there will be a little space, all right? A little space between this place. Those are the things you must look out for it to be valid, all right? For it to be valid. You must look out for these things. They are very, very important. In trading, you don't underestimate anything. Any little thing like this is very, very important and vital. Then the second one is a hammer candlestick pattern. We call it hammer. Like I show you guys, there are three types. There are three types. Hammer, morning star, and bullish engulfing. I've shown you morning star. Now I'm showing you a hammer. All right. And that for all these formations are what? They are bullish reversal candle. Bullish reversal. All right. Bullish reversal. A bearish trend turning to become a bullish trend. This is a hammer. A hammer, this very hammer, we call it hammer because see the story behind it. I told you candlestick anatomy, it tells you the stories that happens during this period, during this formation. All right. Once you see this hammer at a strategic position, support level, at a support level, all right? Once you see it at a support level, because the next topic now that we are going to be treating tomorrow is support and resistance, all right? So once you see all these formations, so these things, this candlestick pattern supposed to appear for them to be valid, they're supposed to appear at a support level, not just anyhow place, all right? Not just anyhow place, but at a support level. Once you see this one at a support level, what it then means that a bearish trend is about to turn bullish. Why? Because the buyers, the sellers, they were pushing the price to the downside. This is the story behind this hammer candlestick pattern, all right? Sellers were pushing the price to the downside. They took the price up to this level, all right? Up to this level, all right? Or you look at this, they took the price up to this level, all right? Now, you now discover that before this whole candle closed, buyers now rejected the price all the way from here. to this point. You see? All the way from here to this point. All right? Then once you see this, that means there is a buying pressure. Buying pressure. Buyers step into the market with full force, loading their orders. That is why you now see that there is a full force. All right? Full force driving the price to the upside. Once you see something like this, immediately this candlestick closed, the next candlestick is your entry. But it has to be at a support level. What is a support level? A support level is a level where price always reverse, or where price has previously reversed. All right? Price will get to that point, it will reverse and start going up. All right? Price will get to that point, it will reverse and start going up. Sometimes price will come to that same level twice, 3 times. And the same thing happens to a resistance. A resistance is a level where price that has been bullish, it will get to that level, it will reverse. It will start coming down. Again, it will start going anytime in future. If price get there, it will respect that level and it will start coming down. That means there are sellers there at a resistance. Buyers always wait at the support level. Now, to make it simple, support level is a level where buyers always wait for price to come to, then they will enter and push the price to the upside. A resistance level is a level where sellers will wait for price. Once price get to that level, they will push the price down. As simple as that. All right? So this candlestick now, for it to be valid, it has to appear at a support level. As simple as that. That is why we call it hammer. It's a candlestick. It's a reversal pattern. Once you see it at the support level, just know that the market is about to buy. Then the bullish engulfing candlestick pattern. Now, why is it a bullish engulfing? It is because that buyers and sellers that have been pushing the price to the downside, now buyers now step in and now push the price up. Before this candle closed, it has engulfed the previous candle. You see, it has the body has engulfed totally the previous candle. That is why we call it bullish engulfing candle. Why? Because this is a sign that there is volume in the market. There are more buyers in the market than sellers. All right? More buyers than the sellers. So it will give you an engulfing candle. The bullish candle has engulfed the bearish candle. That means there are more buyers in the market than sellers. So what happens when more buyers are in the market than sellers? What happens? It will drive price up. All right? Remember law of demand and supply. We all know that. So it will drive the price up. All right? Now, once you see this as a forex trader, and this has to appear at a support level. Remember I told you guys, support level is a level where buyers will wait for price to get to, then they will enter and push the price up. Because plenty people are waiting for price to come and get to this point. Immediately price tapping, you see volume, the price will just start running, rising to the upside. So with that force, with that pressure, there's increase in price. Let's say, for example, let's use filling station, for example. If a price of a fuel, a petrol is $50, all right, $50. Then all of a sudden, no more buyers, all right? No more buyers. You now see the price dropping. The sellers will now start reducing the price because there are no buyers. All of a sudden, the price will now drop up to 30 because people will now be waiting. Okay, if the price drop up to $30, they will buy. And some will say they will buy and stop because they don't know if the price will go up. So as soon as from $50, the price will now come down to $30, meeting the demands of those people who have already anticipated that the price will come to that level, because if there are no buyers, sellers will be forced to reduce the price. Now, immediately the price dropped to $30, you now see queue. Plenty people will now fill the filling station to buy. And as a result of that pressure, there will be increase in price. That is what happened in the financial world. There's no magic. I hope I've been able to break this down. All right. Then the next one is a bearish reversal. Bearish reversal after an uptrend. All right. We have shooting star. We have the evening star, then the bearish engulfing candle. Now, that one we just treated is what? A trend that has been bearish, now bullish. Now, this one we're about to treat is a bearish reversal, a trend that has been up. It now means it is now a time for that trend to start coming down. And the formation you will see, the candlestick patterns you will see, they are what? Shooting star, evening star, and bearish engulfing. These are not the only candlestick formation you will see, but these are the important ones you will always come across on a daily basis. All right, these are more important. All right. Now, this is evening star. All right. The evening star, if you see, is the opposite of that morning star. All right. Is the opposite of that morning star. This is the bullish candle. The trend has been bullish. At this point, it now form a dodgy candle. After this dodgy candle, you now see a bearish candle. Once this formation is at a resistance level. Remember, I told us that a resistance level is a level where sellers will wait for price. As soon as price get to that level, they will want to make sure they push the price down. So that is a resistance level anytime, any day. A resistance level is a level where sellers will wait for price. Who are the sellers? It's you and I. If I'm buying, I will still be targeting that once price get to this level, I know okay, let's say I open my chart, it's a bullish trend. All right. After I've performed my analysis, I know because I will spot a resistance level where sellers will wait for price, where I, as a seller, will say, okay, once I get to this point, I'm supposed to take my profit and now look to wait and see if the price will turn from there. If the price turns from there, if you give me a sign that is going to turn, I am going to start buying. I am going to start selling. I beg your pardon. So you discover that you are a seller and you are still a buyer. So that is what happened in the financial world. And if price is coming down, you are selling. You are now saying, okay, you know that if price gets to this support level, all right, where buyers will wait for price to push the price up, you know that once price get to that level, if it gives you sign, if it creates that formation, that pattern, that there's a reversal on the way, you are going to change your buyers and start buying. So it's like that. All right. So at the resistance level, you must endeavor that this formation, you see it at a resistance level. all right, not within the chart. It must form at a strategic level before it becomes a valid evening star. This is a bullish candle, this is a dodgy candle, the bearish candle. Once it happens, this formation happens at a resistance level, just know that just know that the trend is turning to become bearish. So at that point, change your bias and start to sell. All right? So it's like that. You know the story behind it by now. This is the body, this is the high, this is the low, weak, and like that. Now, we now have bearish engulfing. All right? Bearish engulfing candle. This is a bullish candle. All right? We are now saying that this bullish candle, it opens here. Sellers try to push the price to the downside, but buyers took over and pushed the price up to this level. This is a high, but before it closed, sellers step into the market again. All right, that is why you need to know the story behind a candle. All right, you know the story behind a candle. If I open my chart and I discover that if this candle is still printing and I discover that the candle it rose, the price rose up to this level, and I now start seeing weak, then I will know that sellers have already stepped into the market. They have stepped into the market. There are sellers in the market, all right? There are sellers. Now, if you now close, I will now be waiting to see the next candle. Once the next candle open, what happened? Buyers, they try to push the price up. They stopped here. Sellers took over and look at the push to the downside. This one here, this story, this what happened here this week will tell me, will alert me that there are buyers stepping into the market. All right? Then in what you now see, you see this bearish engulfing. Bearish engulfing, meaning that this candle has totally engulfed this previous candle. So that means this is a selling pressure. Selling pressure. So there are a lot of volume in the market. All right? There are a lot of volume in the market. Once you see this formation at a resistance level, just change your bias and start to sell. Then the next one, the shooting star, is the opposite of hammer. All right? The shooting star is the opposite of hammer. The shooting star is the opposite of hammer. This is what? A reversal pattern. A trend that has been bullish, it will now turn bearish. All right, this is the story behind it. A trend that has been bullish is been bullish. All right, price has been increasing. All right, this one now will have to happen or appear at a resistance level. The price has been bullish. It got to a resistance level. After this push to this level, you now see rejection, 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 up to this point. All right? This is a sign that sellers, they have stepped into the market. It's a selling pressure. This is selling pressure. All right? This is selling pressure. And once this happens, immediately this candlestick, this shooting star closes, the next candle will be a bearish candle. Then it will start pushing to the downside. So for it to be valid, because you see so many within the chart, but for it to be valid, it has to appear at a resistance level. Once you see something like this at a resistance level, you just know that there are sellers in the market. So you need, if you have been buying, take your profit and reposition for a sell. All right. Once this candle close like this, the next candlestick is your entry. All right. So that is that. And that being said, let's move on to our chart so that I can show you some examples. All right. Some examples. All right. So like here, one moment. Like here, you can see that this one here, this is what we call bearish engulfing, bearish engulfing candle, bearish engulfing candle. Why is it a bearish engulfing candle, guys? Because this has been bullish. This has been bullish up to this level. Then all of a sudden, it got to this point, the highest point, but sellers, this is a sign that sellers are in the market. They rejected the price up to this point before the candle now closed. When the candlestick closed, the next bar market, that is the next candlestick, it opens here. It tried pushing. The sellers, the buyers were still in the market as well as sellers. Its buyers tried to push the price again. It got to this level, but sellers took over and started pushing the price to the downside. But before it closed, it has engulfed this one. Once you see something like this, and this point here is what? A resistance level at the top, where price turned and it started coming to the downside. As simple as that. You see? After that, you see this push to the downside. Now, after this push, all right, you see, immediately it came down to this level, giving us a market shift here. By now, you guys should understand what market shift is all about, or a change of character. All right, let me mark it for you guys, because the foundation of trading is for you to know how to read structure. If you don't know how to read structure, you are in for a very big mess. At any point that you want to take decision, you must first of all read your structure. At this point, it has created a support. This is a resistance. A resistance created a support. And now, immediately the price push again, it created another support. This is the last support now. Price now came breaking this level. This one here is now your what? Market shift or change of character. All right, market shift or change of character. You see, it has given us a market shift here, like this. Let me make it long so that you see it. It has given us a market shift from here. Then what now happened? It now pushed to the upside. Look at it. Candlestick here, this long one, this is a dodgy candle. Then this shows us that this very one is what we call evening star. This is an evening star formation. Remember that the chart is what? Is fractal, is not perfect. So the one you see in your textbook or on a slide in real world market is different. It's not that perfect. But once you know it, you know it. All right, you see here, once you see this formation right here, you see the push. After this formation right here, you see a push to the downside, a very massive drop. After giving us this evening star, after giving us this evening star formation, you see a massive drop. All right. Sometimes the evening star formation will just be very neat and clean. All right, you see it very neat and clean. All right, look at it here again. The ability to recognize it is what matters. Look at it here again. It made a formation. The next thing, market drops. You see, this is a formation. After that, market drops. All right, it's telling us that the market is about to sell. Haven't given us this formation, they now sold. So it's very simple. I'm giving you the practical example. Anytime, any day, once you see something like this, you just know that the market is about to sell. Then the next one I'm going to show us is what? A shooting star. You know, we have the evening star, the morning star. The evening star is a 3 candle evening star, all right? Bearish engulfing candle, all right? Then this one is the shooting star, all right? This one now is the shooting star. Shooting star, evening star, bearish engulfing candle, all right? I hope we are getting it right. Now, this shooting star here, you see the shooting star is opposite of a hammer. All right? You see this one? Look at it. Can you see it? Price push, the buyers push the price up to this level. All right? Because it's a resistance level where price has turned before, where sellers are waiting, you see, there was a rejection. And once you start seeing a rejection like this, that tells you that it's a selling pressure. Now what happened? After this, you see, after this, there was a massive drop to this level. You see? Can you see? It's a massive drop. So it's like that. Look at this one here now. You see, this is a clear rejection here. Before you know it now, there will be a massive drop. All right? Because why? You see, because why? It's giving us this this pin bar here. You can also call it a pin bar, but if you don't want to differentiate it, you not say a shooting star or a hammer. Or by the time you get matured in the system, it's a pin bar. A pin bar either is a bearish or bullish. This is a pin bar. Once you know that it appears at a resistance level, you just go, okay, it's time to sell. If it appears at a support level, oh, it's time to buy. You know that, okay, sellers are in the market or buyers are in the market. So it's like that. As simple as this, guys. You don't need to stress yourself. All you need to do is key in to this 1 month crash course and you just see yourself trading. Well, remember, you have to start with your demo account. As we progress, we are going to open the demo account together. I will take you through the process. Open a demo account, either TradingView or MetaTrader 4 or MetaTrader 5, which is the newer version MetaTrader 5. Then you create a demo account. The demo account is free. You don't need to put in money. There is your broker will give you money, will drop money inside that you'll be using to practice. The only thing is that money you will not be able to withdraw it. It's not your money. It's just a demo. All right. So you'll be demo trading, practicing what you've learned, and before you know it, you just put in some money, open a live account, put in little money, and you start using it to practice. We all started like that. It's not a rocket science. It's not a magic. So I've showed you that of when price will turn, okay? This level here, you see, look at this one. This is a morning star. I've showed you evening star. This is a morning star. Now, the price was, you see price decreasing, got to this point, formed this, then before price started pushing to the upside. This is what? A morning star. The morning star will appear at a support level. Evening star will appear at a resistance level. Usually 3 candlesticks. But I've showed you guys. What you need to do is watch my videos. Watch this video not once. Watch it like 1, 2, 3 times before you can get the concept. It's normal. All right? It's normal. All right? Then we're talking about then a hammer. Let me show you guys the one that once you see, you know that there is there's a buy pressure. I already see hammers here, but I want you guys to really see one. Something like this is a hammer. It might not be like that textbook. Oh, this is a hammer. It shows, you see, price came down to this level, to this support level, and immediately rejected. Sellers pushed the price up to this level. Then buyers took over and started pushing the price. You see how the price now, rose up to this level. You see, rise in price, increase in price like this. So once you see a hammer like this, you understand, you just know that it's time to start buying because the price has been coming down before this hammer appeared, then it's time to buy. So it's like that. I've showed you the hammer, I've showed you the morning star, I've showed you the evening star, I've showed you the shooting star, bearish engulfing. The only one that is remaining now for me to show you is the bullish engulfing. So the bullish engulfing, like I told you guys, it usually appears at a support level. At a support level. All right. I've already seen plenty of it, but let me show you guys one that maybe that you understand very fast. So you can see from here, this candle here, you see, after this push, you see, price started going to the upside. All right, let me show you guys another one. You see how this candle engulfed this previous candle? This is a bullish engulfing candle. Bullish engulfing candle. Engulfed the previous candle. You see? Bullish engulfing candle. All right. It does not mean that the candle has to be big like this. The most important thing is that this candle, small, this one here, the next candle, once it prints above engulfing this previous candlestick, that is an engulfing candle. All right. And once that happens at a support level, what you will now see is a push. It will usually cause a reversal. So guys, I want you guys to practice this, all right? Practice this and watch this video very well, more than once, because, okay, look at it. After this, you see this candlestick here, engulf this, and the next thing you just start seeing price pushing to the upside, all right? And this one, you see, pushing to the upside. After price has engulfed this one, see push to the upside. So you see, this is a bullish engulfing. All right. It's like that. This is a bullish engulfing. So there are so many, but the most important thing is that it has to appear at a support level, guys. It has to appear at a support level. If you look at this trade now, what is going on is about to sell. It's about to sell. So that is what is going on right now. It's about to sell. All right. Price is about to sell. It's giving us a sign that it's about to sell. Because why? There's a long rejection of price here, all right? Rejection. Then another one that appears. You see, this one is now higher than this. This rejection from here is higher than this. It has given us a high, a lower high, then another lower high. So it's forming, look at it, it's forming, it's also giving us another formation which we call evening star. Look at it. The next push now is for price to drop. All right? It's for price to drop. It's as simple as that. This is a live chart. It's for price to drop. And once this one now starts, once this very one now stop to print, once this candlestick finish printing, because this point here is a reversal, you just wait, let this, if you want to just cash this one to this point here, you can cash this point to this point because it's short. Once you get here, there is a reversal here. This is a reversal point. All right, there's a support here because price has created a support here. Anything that make price to break this support is going to fly up to this point. And I am waiting for price here because there's another block here and I'm waiting for price here. This is the origin where this whole movement starts. Once we get to strategy, I will teach you guys the strategy that you guys need to be using. So on this note, you can see the market is about to sell. It's pushing to the downside now because of this rejection. It's not a rock sign. See, it's pushing to the downside. This is a sign. This candle here shows us that there are sellers already in the market. And this is the result. All right. When this one opened, the buyers try to push the price up, but as it stands now, sellers, they have taken over. As simple as you can see, it's dropping. It's the price, sellers are pushing the price to the downside. As simple as that, guys. So on this note, I urge you guys to please share my video. Please share, subscribe, all right? If you have any question, please drop it at the comment section so that we can treat it, all right? On this note, I say thank you guys. I'll see you again in the next video. Bye for now.